Hey traders, Nick here on Sunday night doing the strategic market update. The futures opened right now and it's dead flat. So I was hoping we'd get a clue whether they want to collapse into starting the week or not. But we had a tough week last week. But boy, was it wild, and I'll tell you why in a second. So, what you're looking at are the four indices on a weekly basis to declutter. So, we're looking at just one whole week worth of candles. And if you can look at how high we went in that week. But first, let's go back and recap what I had thought in last Sunday's video. I mentioned that we needed a dip in order to get better steam so we can come back and take out this so we can exit this descending channel. We have been lower highs and lower lows for a year, and we kind of went sideways a little bit, arguably, and that's the argument. So what we need is to dip, to come back, take this out with force, and get to this one and breach it, and we can get to an all-time highs. What am I thinking about all-time highs? Check this out. This candle was within under 5% of the all-time high. So it's not that crazy. I'm not saying we're going to go there without any rest. I'm saying that a healthy dip, as long as it's controlled, is okay. Think about it this way. This is the Dow. And if you look at the Dow, which they used to call as the market, we rallied whatever the Dow rallied. The S&P rallied 17%. This one rallied 22%. And we can't afford two red ticks inside of a 22% rally. So if we give up half, it's right here. So another 3.5% will be half the rally. And that itself is normal. So the problem is when we're starting to drop, because we rally too fast, we can't hold. And then we keep making these lower lows. That's why we keep making this descending channel. So the hope for the bulls now, and there is hope that the moving averages are starting to curl up. So the dip might find footing this time. So maybe this time it's different. There are some holes in the charts, and if you look at the weekly videos that I just shared, I specifically mentioned those holes. If you think about it, Tesla had some, Apple had some, Google had some, Microsoft had some. In other words, they rallied too fast on 11/11, and they have not covered that gap they opened on 11/11. Some of them have gaps from older. So overall, the red tick doesn't matter that much. It felt painful, but look at it. It's not that painful. It's just two ticks after a 17% rally, after a 22% rally. The QQQ 17.5, the IWM 17.8. So we rallied more than 17%, and this drop is normal. So having said that, nothing has changed last week. The Fed said nothing new. We finally understood. The market finally understood. We, as a group, our group, we knew it. I've been saying it. The market has misunderstood Powell's words for the last month. He has not changed his mind. In fact, he got more aggressive. He said, I'm going to be raising rates longer than I thought, to a higher degree than I thought back in September, except that I'm going to do it slowly. In other words, he's not going to raise any more than 75 bips, and he's probably going to drop it a little bit, and he did. But he said now he's going to extend it longer. This is probably the smartest thing he's done. Hey, let me slow down. Let me see if there's a delayed effect between my actions and the economy's destruction. That's basically what he's thinking. I would argue he should stop for a month and see what happens. Anyway, I'm not the Fed. So what happened? Nothing. We literally just are taking a breather in order to see where we're going to stop on the way down. So next week we have a whole bunch of reports about the state of the real estate market. And more importantly, we have a GDP headline on Thursday. Now this, folks, is the final GDP. All the GDP that we've had so far in recent history have been updates. So we had one negative GDP on a quarter. This will be the official second quarter. If it is negative, then expect people freaking out. Now I have to tell you, they changed the rules. Two negative GDPs does not equate an actual declaration of recession. There's a bureau in the government that is actually has the final say. They can just deem it, nope, not a recession. And they'd be right in my opinion, but they can deem it not a recession. So this might freak people out on Wednesday night afternoon. They might want to lighten up for fear of the GDP headline on Thursday morning or whenever it comes out. So just be aware of that. And of course, the real estate data is not likely to be good. I mean, the refinance market has been decimated, and probably purchasing of homes is slowing down if you talk to real estate friends. Okay, so technically, this is the SPY. It has a little bit more downside to go just based on this red mark, this red pattern. So there could be some downside. If I were you, I would focus on Apple. Why Apple? Because it is the biggest company on the planet, arguably the best. And it is at a must-hold level. So from a daily perspective, this place needs to hold. Otherwise, this is the target. The problem with this is that if you go to this target, you will trigger this one, which is an even worse catalyst. But I cannot imagine Apple doing this alone. Therefore, what Apple does might be a hint as to what the markets do. So if Apple gets back to 137 and 138 and holds, we are in decent shape. So focus on Apple this week. Of course, it has no issues of its own, none that I know about. So unless Tim Cook really messes it up, Apple should bounce back and face resistance. So what happens on the dip versus the lows? Focus on Apple. Now, if the S&P wants to collapse like 10, 20%, I think Apple, Microsoft, Google, and Tesla would be the biggest one to drag it down there. I say this because Amazon has already lost a lot of weight. Tesla, I told you that 140s are possible based on the weekly chart because the bears have it. But it can rally fast. Please, I would not short Tesla. And if you want to take starting positions long, that's fine. But know that this is the pandemic level and it's still 57% away from it. So Tesla can theoretically be 2 digits and still not be at the pandemic level. So there's no reason why it should go there fundamentally. Technically, it also has support, but technically it also needs to get back above 210, 213 in order for me to breathe a sigh of relief, meaning it could rally $60 before it hits the resistance. So don't short it, but don't go all in because it's down to 150. You understand? I'm optimistic in the long term. I'm not sure this is the bottom. It could be a little bit lower. So if I were forced to buy Tesla stock, I would only buy like 20% stake. All right. So in summary, we have some earnings as well. We have reasons to hold technically, and we don't have reasons to panic technically because, like I said, we are in a good shape on a weekly basis. The goal is to get out from this descending channel. The only way you can do it is to have a dip, have nothing happen, have the market stabilize, and come back and bust out. Do you remember 2 weeks ago, I used the stock called AVGO as an example, and I said, here's an example of a stock that needs to dip in order to break out, and it dipped and it broke out. So the market just need to do that, except the idiots did this in the markets in one candle on the Powell announcement. They went there and failed. So they drew the shoulder and then they immediately retreated. So I don't count it. So let's see if they can draw the shoulder. So the SPY looks like that. Look at it. You understand what I'm saying? Look, except they did this and failed immediately. So they need to hold after filling this gap. That's a weak point. They have more support here. So there's very good reason to stop here, come back, struggle for a week or two to come back to here, and then in about 3 weeks break out of here, or 2 weeks. Otherwise, we repeat, selling every rally and breaking into a new low. So take it one day at a time. I'll have an update for us in the morning and in the afternoon tomorrow because things are pretty fluid. Just don't do anything drastic. And don't listen to the news. It's garbage.